Let's talk about a forgotten stock, a stock that is down 40% in the last 3 years, down 33.9% the last year, and down 20% year to date. It's a stock that was growing extremely fast. Everything was going well for that stock for quite a while until interest rates increased quite a lot. That company you might know because we've talked about that for quite a while. Let me remove me here, and that's Enphase Energy. Now, Enphase at the time of making this video has a market cap of $14 billion. Forward PE 29.8 times, EV to sales 8.3 times, EV to EBITDA 24.4 times. Now you might say, 29.8 times forward PE. I thought it would be much lower since the stock is down by quite a lot. Well, yes, that's the thing. We've seen that with Nvidia, for example. Nvidia is up 200, 300%. And yes, from a forward PE perspective and other valuation metrics, it didn't go up by much. That's because the business has also grown quite a lot. With Enphase, stock is down because the business is down a lot as well. And so that's why you still have, let's say, a high-ish PE, 29.8 times. More on that in just a second. If you look at what the analysts are expecting for fiscal year 2024, of course, a bad year. Not surprising, we've talked about that in the past, but maybe that's where most investors could find some alpha. Maybe going out of the high interest rates environment is the time to buy these types of stocks. Because if you look at what the analysts are expecting, basically 35% down in sales and EPS for fiscal year 2024. Then a reacceleration in growth top and bottom line for the next 2 fiscal years. Now, of course, with all the downward pressure in the stock and in the business, the estimates, there were quite a lot of revisions on the way down for, of course, this fiscal year, but the upcoming 2 fiscal years as well, despite seeing such growth. I mean, if you look at fiscal year 2025, sales, $2.14 billion. The estimates a couple of months ago were closer to $3 billion. And the same for fiscal year 2026, estimates $2.62 billion a couple of months ago, closer to $4 billion. Now, if we go and compare the forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth to its 5-year mean, yes, it's true that on all metrics we are now lower. Now, of course, just because it's lower than its 5-year mean does not make it an automatic buy and does not even tell you that it is cheap. Don't forget that beforehand it was valued at a premium because the business was growing top and bottom line much faster than it is today. It had quite a lot of momentum. Today it is cheaper, yes, but the business certainly does not have the same momentum that it had previously. But then again, if we have now bottomed and we are on our way back up, then yes, this could be a great opportunity because you're going to have the perfect, let's say, inflection. One, stock goes up, but the business fundamentals go up as well. And so from a forward multiple perspective, you're not going to see the stock become extremely expensive as explained at the start of this video. Now, before continuing, if you enjoy this type of videos, give it a thumbs up, subscribe if you have not. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I first want to start with some information with regards to Enphase and SolarEdge because last week some weakness in the stock because of a JP Morgan analyst. So he said the primary takeaway is that Europe residential solar demand remains moribund. I don't know what that word meant before I read this, but now I know. I thought it was morbid at first, but no. Due to still elevated channel inventories, low power pricing, and near-term uncertainty related to elections and policy changes. And so he has a price target of $124, previously $128, which is of course higher than the price we're at today. Further down the video, we're going to look at the average analyst price target. For SolarEdge, he lowers it by much more. Why is that? Because SolarEdge has a relatively larger presence in Europe. Plus, SolarEdge got hit quite a lot more recently because one of their customers had filed for bankruptcy. And so if we go and look at Enphase previous quarter, not a great quarter at all. Revenue again down quarter over quarter. So quarterly revenue came in at $263.3 million. Gross margin, GAAP gross margin 43.9%, non-GAAP 46.2% with net IRA benefit. Free cash flow for the quarter was still positive, $41.8 million. Now, if you see the comparison here, of course, it's pretty clear it has been deteriorating quarter after quarter. And also they reported an operating loss and net income loss as well, or net loss as well. So yeah, bear that in mind, but overall still free cash flow positive. They did say that revenue in the United States for the first quarter decreased approximately 34% compared to the fourth quarter, but their revenue in Europe increased approximately 70%. So Europe is growing quite fast for them. Now, of course, with the comment that we've got from the analyst, remains to be seen if they are getting hit in Europe right now. Now, last quarter, they also repurchased around $42 million worth of shares at an average price of $126.21, so definitely higher than the price we're at today. Maybe in this quarter, they bought a little bit more shares, remains to be seen. They also spent approximately $60 million by withholding shares to cover taxes for employee stock vesting and options in the first quarter of 2024 that reduced the diluted shares by around 480,000 shares. For the upcoming quarter, which I believe they're going to report at the end of July, revenue to increase quarter over quarter. So revenue come between $290 to $330 million. GAAP gross margin to be within the range of 42 to 45% with net IRA benefit, which is of course a bit of the same as this quarter. But this could also mean that this is going to be, let's say, their best quarter in quite a while, because you're going to see a reacceleration of revenue. Of course, it remains to be seen if they can achieve that. Hopefully they can. But the most important part, in my opinion, is yet again guidance. What do they see? What do they project for the second half of this year? Can they already tell us where the market is going, sentiment? Let's wait and see. Also on Friday, PCE report, which of course could give us a better picture of what's happening right now. If it's positive, then stocks like these could go up in one day 10% or so. You're going to see at the end of the video the chart. There is a gap. Now, last week they attended a conference in Europe in Munich, so they're definitely taking the European market quite seriously. They showed some new products there, so let's see if the momentum in Europe can continue for Enphase despite some, let's say, weakness according to some analysts. And so almost ending here, the current average analyst price target sits 23.17% higher than the price we're at today. If we go and look at the chart right now, this is on the daily. RSI is low, but not oversold. Maybe, yes, maybe at around $100. That could have been the bottom. We have been visiting the $100 mark quite a couple of times, and we've always found, let's say, in that range, some support. Now, on the daily, like I said, if the PCE report is very, very good, we could again gap up, or at least fill that gap between $118 and $111. Could very well happen. That would mean that we would land above the 20 and the 50-day moving average. The 200-day one still sits above 120 at $124. So overall, to conclude, that's about it for Enphase right now. I do think that for long-term shareholders, maybe we're entering a period where it makes sense to add to your position, or maybe if you want to open a position, I think right now could make sense. Of course, you could also wait a couple of weeks, then we get the earnings report. If it's a good one, guidance is good, then of course the stock will pop. If you don't want to risk that, then just wait to get more information. But definitely I feel that we're entering a stage where, one, interest rates have peaked, it's going to come down, which should help with demand for products that Enphase and other residential solar companies sell. So that's about it for this video. Do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.